Thanks for joining our podcast, The Stamp of Approval. You know, during the pandemic, I'm providing many podcast episodes with a variety of the very best professionals in their business to help you navigate your life during these very uncertain times. You know, you're going to get through this. We're all going to get through this. It might be tough, but we'll make it. So create a plan for yourself and what you're going to do in your business and take action. I'm Kristin Stampini. My husband, Mark, and I own multiple businesses. In 2017, we opened our virtual assistant business where we help small business owners hire, train, and staff administrative assistants at a very affordable price. We also have a real estate business. We have a real estate team, and we also just opened a real estate brokerage. So my real estate career actually began during the financial real estate crisis back in 2007. You know, when I was personally bankrupt and broke. Okay, so I've been through this. I know how to get through this, and I thrived through the times and actually built $1 million real estate team during those times. So this year we did open our real estate brokerage, and we also have an investment company, and I'm a real estate coach for Craig Proctor. So today I have my friend, Ruben. He has been in South Florida real estate market since 1990. He started as an appraiser at a large national savings bank. And in 1993, he went contract with the largest independent appraisal company in the state of Florida at the time. In 1995, Ruben started his own real estate appraisal company, which he was actively involved until 2009, which definitely helps consumers today when you have a lender who also has done a lot in appraising. So Ruben started and grew an independent real estate brokerage with offices in Fort Lauderdale, Miami, and Sarasota. And in 2011, Ruben returned to his banking background as a branch manager for a large national bank. At the bank, he was involved in many aspects of lending, including residential mortgages, consumer lending, and small business lending. He has had several years of experience in the residential lending business as a branch manager for several large mortgage banking operations. His current position as an area manager for CMG Financial provides a greater number of mortgage programs accompanied by better service, faster processing, and great pricing for his clients. So Ruben's 20 years of experience and vast knowledge of lending and real estate industry provides the skill to achieve positive results. Ruben's well-established knowledge base, as well as his character, are the foundations of his success today. And, you know, we've been working with Ruben, I don't even know, I think 6 years. He is amazing. His team is awesome, you know, very knowledgeable. And that's why I'm bringing him today. And we're going to discuss what's going on during the pandemic and what, myths that are also out there. So welcome, Ruben.
Well, thank you. Thank you so much for having me on. I really appreciate the kind words.
Yeah.
It's quite a time we're living in right now, right?
Yes.
Kind of nutty. So very important that we educate our fellow realtors, our fellow mortgage professionals, our consumers right now during this time that we're going through.
That's right. And the thing is there's so many things out there that are being said that people don't know about. So I want to actually go ahead and, if it's okay, go ahead and start. And we really appreciate your team, by the way, because, you know, you have to, especially in today's, what's going on today, you have to really get with the best in the business to navigate through these times of what's real and what's not. Okay, so let's talk about one of the things that, that people really need to know is your forbearance. So I can't afford my mortgage is one thing, but if I can afford it and I just don't want to pay it because the option's out there, can you talk a little bit about that? And how is it going to affect my credit? Is it going to affect my credit?
Sure. So absolutely. So forbearance, if you need it, if you've lost your job or you lost your hours and you need it to get through, I highly suggest you take advantage of it. But just like you said, Kristin, if it's something that you can actually afford to continue to make your mortgage payments, my suggestion is that you continue to make your mortgage payments. And the reason is that, we still don't know what the end result is. We've been through this before. We've had forbearances, for example, during hurricanes, or better said, after hurricanes. And it doesn't always quite work out the way we think it does. It's not supposed to affect your credit. At the current time, though, as of today, and this may change, everything's changing daily.
Yeah.
If you do go into forbearance on your current mortgage, while they may not indicate you late on your credit, you would have a problem then refinancing that loan, or possibly getting a new loan on a purchase, later on. It is considered for underwriting standards currently as somewhat of a modification. And then we have a grace period that we need to wait after modification. So if you go into forbearance, unless this changes tomorrow or this afternoon.
Okay, so just so everybody knows, today is April 9th, 2020. Right. Okay, correct. So I just want to make sure people know. So as of today,
right.
That so number one, I need to make sure that my bank is going to allow me to have it, right?
Correct.
So, or where I have my mortgage. So don't just go and miss payments.
Correct. You need to go through the paperwork. It's a full-time job, I tell people. This is a big deal. You're able to take advantage of the situation because it's necessary, but you have to fill out all the paperwork, send all the paperwork that they need, documenting it. You need to contact not necessarily your bank, what you consider your bank, but your servicer. So whoever is on that form that you get your monthly statement on, that's who you need to contact and go through the process. I'm sure they're swamped. I'm sure they're super busy, but you got to stay on it. It's like a full-time job.
Yeah, and you don't just want to miss it without getting approved, because could they, and I don't really know, but if I just know back in the financial, in the real estate, back in 2007 through 11 or whatever, that people that miss their mortgage, and if they don't get approved for, let's say, the forbearance, I remember before what they would do, because I did a lot of short sales, is if you missed your payment, and they would make you pay that payment, the next payment, any late fees, and it was all due at the same time.
Correct.
So could they do that, or do you know if they could do that today?
Well, we don't have all the answers yet, but the fact that the possibility, like you just mentioned, that exists would concern me, because we've seen it in the past where they do a 3-month forbearance, and on month number 4, not only do you have to pay number 4, but at a minimum the interest for the last 3 months. Sometimes they add the payment to the end of the loan, those 3 months or 6 months or whatever it may be. But the bottom line right now, I go back to the point. If you need it, if you've lost your job, if you're having a difficult time making ends meet, obviously it's there for that reason. Take advantage of it. If you can continue to make your mortgage payment, it's very important that you continue to make it, because at the end of the day, you don't want to add more years to your mortgage regardless. You don't want to do a modification. You don't want this to stop you from possibly buying a home in a year or two, or even refinancing, with the rates are unbelievable right now anyway. So there are other options beyond the forbearance to possibly work on bringing your payment down. If you have a high interest mortgage now, we're closing refinances every day. If you haven't been affected with your job, as far as we can still do a refinance. The rates are super low. So it is an option. And sometimes when you refinance, you do get to push off the payment 60 days anyway. So,
but even if I'm refinancing, just like getting a mortgage, I have to have my job, right?
You do have to. We're definitely doing verification of employment. We will go back 5 days prior to the closing. So if it's something that you, on a purchase or a refi that you've been working on for a while, and now you've lost your job or lost the hours, it could be an issue. So you definitely have to have a job.
Okay. And then you guys, the big thing that everybody really needs to know is that things are changing daily, and a lot of things. So you have to really know what's changing daily. And then some things are interpreted. So for example, the law or whatever they're putting out there is interpreted different by different people, right? So I know I was talking to my CPA a few days ago, and he was telling us, just different options that people have, and actually he'll be on here next week, and because he's got incredible information as well. But the thing is the way he interprets something is different than maybe even the way another CPA may interpret something. So you got to be real careful on who you're talking to. Make sure you're getting the correct information, and definitely, like Ruben said, reach out to your servicer. It's not your bank, because your bank is, sometimes it is the bank, but it's a lot of the time it's servicing. It's not the bank that you actually went to get the loan. It's a servicing company. Then what you want to do is you want to make sure if you can pay your mortgage, recommend you do it for many, 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 many reasons. Okay. So don't just not pay it, or do even a forbearance if you actually can afford not to, because it could affect you. Is as far as if you wanted to sell your home and you wanted your credit, and it's not supposed to, but now it looks like it is. So if I do a forbearance, make sure you're doing the forbearance and that the loan is not going to be due on month 4. Okay, for the ones that you miss, that it's actually going to go on the back end, or that your interest rate is not, not interest rate, the interest, because you're still having to pay the interest. So like Ruben was saying, on month 4, because if it's 3 months that they're allowing you to not pay your mortgage, that on month 4, it's not going to be your mortgage payment plus 3 months of interest. So know exactly what you're getting into if you're going to do a forbearance, and make sure that you're approved through the servicing company or whoever has it. All you got to do is look at your statements that come in the mail, and it'll tell you right there who the servicing company is to call. Right.
Right.
And then
Yeah.
now you're saying though that, because what happens if I own a property and I really was planning on going ahead and selling it and wanting to buy something else? Obviously, I want to wait a little bit. Okay, is now if I want to put my mortgage, doing a forbearance, is that going to affect my credit, and is that going to affect me from actually selling my home and buying a new home?
So it should not affect your credit. I mean, but remember, when you do a mortgage loan, there's a lot of factors beyond credit that are important. And when you're doing a mortgage loan, there are current rules that if you have done a modification or a forbearance within a 2-year period, then you're not eligible until that 2 years is up for a new loan. That's currently how it is as of today. Like I said, this may change because there's a lot of softening going on with the government and what they're allowing us to do. I know a little bit off topic here, but one of the things that they allowed us to do is on the appraisals, they softened that stance. So we're doing a lot of drive-by appraisal as opposed to
Really?
as opposed to going inside the property. So the government is definitely loosening standards. I mean, I can only speak to what I know today.
Yeah.
But as of today, again, my suggestion is if you can make the payment, definitely make it.
Okay, and then what are you seeing as far as new home purchases?
So it's been interesting, right? We're learning all how to do things differently, but we're still seeing contracts coming in. As far as actual people, either they saw them prior to the pandemic or stay-at-home order, or they're doing it a couple different ways. So either the seller leaves the property and they come in after and see it, or they're doing it all virtually. It's fun. I mean, it's a little bit of a joke, but they say if you can find a spouse online, why can't you buy a house online?
That's right. I saw that.
Yeah,
I saw that.
I thought that was kind of funny, but the reality is again, if you have to move, or your buyer needs to move, you got to find a place to live. So we're seeing contracts coming in.
Well, and the thing is there are people that do have to move. Obviously, possibly divorces and estate sales, relocation, people moving into nursing homes or assisted living. There's number of reasons that people do have to move. And also some people want to sell or want to buy during this time because maybe a buyer, for example, was getting beat out. Okay. So there was multiple offers all the time when they're making offers. So they were getting beat out a lot. So those people are like, oh my gosh, this is a perfect time for me because I'm not having to compete against all these other people. Sellers, on the other hand, are looking at still selling because they're sitting there and they're saying, okay, well, this might be a good time to sell because I don't know if the market's going to go down later and I do need to sell my house. And if I get the price that my house is worth today, why not sell it? Okay, so people are still doing real estate business. It's still happening. Currently, I'm in Palm Beach, Florida, Boca Raton. What I'm seeing is basically in March, it went down about 9%, 9.3% as far as closed sales, but prices are still holding strong. So, just from the past, what we've seen in other, when we've gone through other, recessions and things like that, from 2001 to where everybody was scared and didn't want to buy anything because they didn't know if, what was going to happen, right? If somebody else was going to bomb us or whatever. And then obviously the financial crisis in 2000, it started in really 2007 or right around there. We did not see that. The financial crisis, you definitely saw the prices, especially here in South Florida, went down. Okay. But the other things that have happened, if you go back and look at history, they didn't. So we don't really know what's going to happen, if it's going to affect prices. This is still a good time to buy and sell real estate. And as Ruben's saying, people are still, you aren't seeing a huge drop in your sales right now.
We're not. We're seeing, obviously, like you said, 9.3% less in closed sales in March. We're expecting some changes. Like I said, I've been in the business forever. I went through Hurricane Andrew.
Oh yeah, Hurricane Andrew, absolutely.
And I remember that was in August, and we thought the world had come to an end in September. And prices by December were back. As a matter of fact, because there was less inventory, prices went sky high come December. Only a few months later. Yeah. Same thing happened, after 9/11, where for a short while people didn't want to live on the top floor of the buildings. Remember, I don't know if you remember that stuff.
Because I wasn't in real estate at all.
Okay, so yeah. So during 9/11 that happened, and obviously more recently the financial crisis, where we've come a long way. Back then in 2007, 2008, underwriting standards were not where they are today. And for the majority of the homes that we lend on and that you sell, most of them are primary residence. People are living in these homes. And if they're investments, they already have tenants in there. Back in 2005, 6, 7, that led to the crisis, you had people buying 5, 6, 7 properties at a time, and they were vacant. Yeah. So, of course, those were the first to go into foreclosure or short sale, whatever it may have been, which brought the prices down.
Well, and you didn't even have to verify that they had jobs.
Right. It was they call them the liar loans, right? The NINA, no income, no asset loans. They're called liar loans. And we were lending at 125% of
Yeah, that was crazy.
Crazy.
That's when I came into this business during those crazy times. Yeah.
So we should be in better shape because of that. I mean,
we will. Obviously we don't have a crystal ball, but that was a financial crisis real estate. Okay. This is not at all. So we're not seeing prices come down right now. We're not seeing on April 9th, 2020, prices are staying very stable right now. Okay. So tell me about interest rates. Interest rates. So this is a good time to refinance, right?
Yeah, if it makes sense, yes, it is. Absolutely.
Okay. And interest rates, tell me about interest rates. How are they doing?
So they've been low for the last 3 years. So it's a great time to buy, whether it's today or 2 weeks ago. I mean, the rates are still very low. It's like the stock market, right? You're never going to buy a stock at the lowest and sell at the highest. The rates are kind of the same way. They do move constantly, especially with what's going on right now. A couple of things happened beyond the coronavirus. I mean, we did have an issue where the oil prices really started the process of bringing the interest rates down when the price of oil really, with the whole issue with Russia and Saudi Arabia, started bringing money back into the U.S. and buying the bond market and bringing that price and yield down. So as international money started flowing into the U.S., the rates came down, and then obviously coronavirus just made it explode even more. So rates were significantly lower probably about 3 weeks ago.
Yeah.
Then banks and lenders didn't know what was going on, and they kind of raised them a little bit just because they couldn't handle the business. And things have settled back down, but they're still excellent rates. I mean, we talked a little bit about this yesterday, Kristin. As a realtor or even as a lender, we're not economists. I'm not trying to predict what's going to happen. The rates are low. Our job is to get people in homes. If we focus on that Mr. and Mrs. Smith or Mr. Johnson, or whatever their name may be, need to move. And the rates are good. It shouldn't be an obstacle. And the programs are still out there. There are some lenders that have changed their underwriting guidelines for certain products. At CMG, we're a national lender. We still doing FHAs down to 580. We still have jumbo loans. Again, there's less of them as far as products, but they're still there. Some lenders do not have, they've raised their minimum scores on FHA. But the bottom line is the liquidity is still there for us, and the rates are still low enough that we should be able to take care of any of your customers.
So credit score, you said there's still things out there at 580 credit score?
We can do an FHA loan at 580 today.
An FHA loan. Okay, and then what are the rates today? What are they ranging about? And then obviously, hold on, I'm sorry. Rates, guys, just in case you don't know, it has to do with a lot of different things. Obviously, credit scores, so that's why it varies, okay?
Right, it does. A credit score, type of property, investment, for example, you're going to pay more on an investment than you are on a cash out refinance. You're going to pay more on a cash out refinance, you're going to pay on a regular refinance, you're going to pay more on a refinance, you're going to pay on a purchase.
So it has to do with so many.
But the rates are definitely good. They're still in the 3s and the 4s depending on the situation, right? It is kind of a funny market where you for many years points were part of the process, and for the last 10 years or so, lenders don't charge points. What's happening now is that a lot of lenders are starting to charge points, and you're getting more bang for your buck. If you pay a point, you used to get about a quarter off in rate. Well, now if you pay a point, you're getting significantly more. So again, this is something to get with your mortgage professional and see what works best for you. The rates could be, sky high this afternoon. We don't know. It's constantly moving, kind of like the stock market, but they're low, and it shouldn't be an obstacle for anybody to get a mortgage at this point.
Well, and then a lot of people say, I don't know if I should buy now and prices are going down and things like that. And the thing is you have to look at it. First of all, you're probably paying somebody else's mortgage off right now. And then as far as prices, if the prices, let's say they go down 5 or 10% or whatever, the rates will go up. So they adjust. Okay. So will you be really losing per month? So for example, if something is $25,000, if a home that you buy is $25,000 more, you're looking at about, what do we say, 120, and it just depends, but around, let's say $125 a month, okay, that you're going to pay because of a $25,000 price difference, okay?
Right.
But the rates are usually going to adjust. So I definitely would not buy thinking that the homes are going to crash like, the prices are going to crash like they did back in 2007 in that time, because I absolutely do not think it's going to look like that. Not here in Florida. Okay. We don't see it. And again, we're not in a financial crisis, and it's not the same. Okay.
Right.
Now
we've had an inventory problem, honestly,
yeah.
right? We've had an issue with inventory.
That's right.
And, I always tell people we got two things that really affect us here in Florida. We have a beautiful Atlantic Ocean on the east and the Everglades on the west. So there's nowhere to go but up. So you're starting to see all the condo building, but the reality is there's not a ton of land for them to build anymore. So
that's right.
As long as inventory is in check, prices shouldn't really dive.
That's right. And the other thing is I was looking at, I'm always studying the market, and our closed sales in February over last year in February were quite a bit higher, like 10+%. So our real estate is doing extremely well. Going down in closed sales, because of because of the pandemic, 10%, 9.3% or whatever this month is not crazy, you guys. That's just closed sales. But the prices are still staying strong. Okay. Right. So you gotta measure that. What's happening with jumbo loans? They're still there? How are the rates?
The rates are actually, historically jumbo loans are always a little more expensive than the standard loan. That actually flip-flopped earlier this year. And it's kind of flip-flopped back now. So they're a little higher than the standard loan, which is normal. We're looking for just everything to become more consistent. That's all we're looking for. And looks like we're starting to see it this week, where the difference between the 10-year bond and the mortgage-backed security was very wide last week, which nobody could understand. That seems to be kind of compressing, which is what we want. We want to make things normal. People hate uncertainty, especially in the bond market. So jumbo loans in general are not sold in the secondary market. They're portfolio by the bank. So again, depending on their ability, and I said in general because they do sell some of them. So the secondary market has had an effect on some of the jumbos being sold. So there's maybe a smaller market for the jumbos or opportunities or liquidity, but we have them. And the rates, like I said, they're a little higher than the regular loan, but nothing unusual.
How about foreign national?
Foreign national is a little more difficult. So what we've had, now there are foreign national products out there available today, but that's the area, not just the foreign national, but the foreign nationals and the bank statement loans, the loans that are considered non-QM loans. Those loans are the ones who have been put on hold right now the most. That secondary market has really dried up. Nobody's buying those loans in the secondary market right now. So the liquidity has gone away for the most part. So those are loans that are being very, very difficult to do.
On every country?
Yeah. Yeah.
Really?
It's just a type of, yeah. It's nothing to do with where they're from. There are lenders still doing them, but again, the amount of lenders is definitely shrunk.
Is the interest rates a lot higher than they used to be then?
The rates on those loans were always higher. They're
Yeah.
always higher than standard loan because there's more risk, right? You're
Right.
either getting information from a foreign country or you're doing a bank statement loan where you're determining income on,
Right.
different standards. So the rates are always a lot more on those type of non-QM loans. They do exist. There's a company out there still doing them. We can still do them, but it's getting harder. Very, very hard.
Okay. And so you talked a little bit about FHA. So FHA has not raised the score requirements,
No.
credit score?
No, they have not raised well, HUD has not raised them at all. What's happened is some lenders have raised them on their own because of liquidity issues. They feel that if they don't have a higher quality borrow or loan, once it closes, it's going to be more difficult for them to sell. Depending on the banks or the lender in this case, liquidity and servicing portfolio has a lot to do with how much risk they're going to take. At CMG, as of today, we're still doing FHA loans down to 580.
Okay. And then are refinance rates, and are they higher than purchase rates?
Historically, no, they should be the same unless it's a cash out refi. So what's a cash out refi? Well, that's actually you're paying off credit cards. You're actually putting money in your pocket. You're paying off, mom or dad or something. You're actually getting money out of the property to do something else with it. On a rate and term refi, you're just refinancing your existing mortgage obligation and any costs involved in the loan. So on a cash out refinance, yes, they're a little more money. On a rate and term, typically they're not.
Okay. So let's say that, and I don't even know if you can answer this or not, and it may change, right, in the next day or week or whatever. But if I was planning on, by the end of the year, I wanted to sell, I'm not going to do it now. I'm going to wait 2 months or 3 months or whatever. But I was planning on selling my house and purchasing a new house. But I definitely want to try to take it, because I do want to try to take advantage of the forbearance. Is that going to affect me in purchasing a property in the next 6 months?
As of today, yes. Yes,
Okay.
because the forbearance that you take advantage of now for 3 months or 6 months, I mean, they're talking about possibly extending it to 6 months. So that, as the way the underwriting sees it today, it will be considered a modification. It's not going to affect your credit, but on the purchase money market mortgage, it would affect it as of today. I expect, Kristin, considering where we're at with the pandemic, that those rules may get softened. It's just so much going on we're not there yet. So figure we won't really know for about another 30 days or so.
Okay. And then as of today, it'll affect it. It's not going to affect your credit,
No.
but how will it make it so I can't? Because if you miss a mortgage payment, and tell me if this is still true, that you can't purchase a property for a year. Is that correct?
That's right.
Okay. So missing a mortgage payment. Now, like Ruben said, in the current, what's happening currently, that it's not supposed to affect your credit score. But if you do take advantage and you are able to take advantage and you wanted to with the forbearance, but you wanted to sell and buy in the next 6 months after that, he's saying it will affect you because it's considered, what did you say?
Well, it's like a modification.
Okay, so it's considered a modification. And how does a modification affect you from?
Pretty much exactly the way you just said. That was a perfect example. If you just missed a payment or you were late on a payment, even once you're late 30 days, they report you late on the credit bureau. Even if we weren't even talking about this forbearance situation, if you were late 30 days on your mortgage, you have to wait 12 months to get a new mortgage. Okay. Now, all we're talking about here, guys, is traditional mortgage, conventional, FHA, VA, USDA. There's the non-QM that we briefly discussed that always have possibilities for types of mortgages because they have different standards. But in general, yes, it would be considered, it's looked at like you didn't meet your obligation, bottom line.
Okay. Awesome. So I think that was great information. Basically, still doing business, just different. So a lot of the business that we're doing is virtual. You know, here in Florida, we are real estate is essential. It's considered an essential business. A lot of it's done actually virtually. Okay, even here. So we're actually doing appointments just like what Ruben and I are doing right here. So we're doing buyer appointments, we're setting it up, and we're actually, learning about the buyers and what their needs are, just as if we met you in person. We're doing it just like this. We're doing it on Zoom calls, actually getting you approved for a mortgage, okay, and talking. Now, obviously, if you have a job, you obviously can still get approved. And even if you are going to wait a few months, and let's say you just got laid off let me ask you this. So let's say I've been at this job for 5 years and I just got laid off for whatever, let's say it's 2 or 3 months. And then I get right back into the same job. Am I going to be able to purchase right away again?
That's a great question. The answer would be no. That's today. But what we're expecting is that to be handled very similar to how we handle somebody who goes, for example, on maternity leave, where they're out for 3 months or 6 months. And once they get back into the workforce, we can document that, decline in income, for lack of a better phrase, and move forward. We're not there yet, but again, Kristin, this is like a work in progress. That's kind of what we're expecting to see, where we're going to be able to say, hey, Mary, like you said, 5 years, and now, because of the pandemic, she didn't make money for 3 months, but she's back to work at wherever, and she's making the same amount of money. Can we encapsulate those 3 months, document it, obviously, and then move forward? We expect that to come down the pike also.
Yeah, because I think that out of everything we talked about, that makes sense.
Absolutely.
The only reason why I lost my job is because of the pandemic. I'm going back and doing exactly the same thing. I've had that. So the thing is you got to work with, professionals that can navigate you through this time. But this is also the time to get set up. So if you're working, this is a great time to still purchase a property. We would do this virtually, just like we are now. We can get on, we can show you properties virtually. We can actually show you videos. You can still, depending on if it's vacant or not, you can still walk through a property. We just can't, we have a lot of things that we put together because of COVID-19. So we have processes and systems to make sure we keep you safe, which is what's important. But people are absolutely having to still buy. And even people that want to still buy, there are people that are like, oh my gosh, this is a great time to buy a property because I'm not up against all those people that I was up against before. And there's not multiple offers on this and, and things like that. And sellers, it is a great time to sell too, because this is the time that you can look at it and say, first of all, people who are out in the market are serious about buying. Okay. And the other thing is you don't know exactly what's going to happen. So if you can sell at the price, even though you might have virtual showings more and things like that. But if you can sell at the price today of what your home is worth and you're getting it and you're like, yes, I want to sell, we're working with a lot of sellers still. Okay. So the market is not crazy. It's not stopped at all. And we would love the opportunity to help you and navigate and work with Ruben and helping you find out exactly what you can be doing today. If you don't have a job, we can still start you on the process because we can still look up everything to find out if you need to be tweaking things or like this is the perfect time for you to be working on, different things that maybe need to be done in your credit. Right, Ruben?
Great time. Exactly. Great time.
So,
especially, beyond credit, obviously, if you haven't filed your 2019 tax returns, we can have a discussion about where you want to be in 3 months or 6 months or whatever it may be. But now's the time. I mean, we're home, we have time, and we always complain that we don't have enough time, but now we do.
Yeah, so this is the perfect time really to get set up. So if you have a job, this is a perfect time to buy because you're not up against nearly as many people, especially if you're, a first-time home buyer and things like that. In where where you're in a market that there are multiple offers that you're up against all the time. If you have to buy and sell, of course, and then if you want to buy and you want to get set up, we can help you go through that process right now. We can start showing you even homes virtually. We do it all. There's a lot of videos in 3D. And so it feels like you're inside of the home anyways. Again, we're not seeing crashes in prices, or we don't expect it to be crazy like that. Again, it's just slowed down a little bit, not a crazy amount. How about, let me ask you one more question. If I am renting and I know I'm going to purchase a property and I know that I can take advantage of not paying my rent, do you know if that's going to affect me into possibly not being able to purchase a property?
Yeah, it can, because if you're currently renting, we always do a verification of rent from your landlord. So whether you're renting from a community or you're renting from an individual, as lenders, we do verification of rent. So it's important. If they give you a rental forbearance, which there are large, communities that are doing that. It probably won't affect you as much as the mortgage right now, but again, it could affect you because we do need to verify 12 months of rental payment.
Okay, so you'll call up and you'll make sure that people have paid their rent and talk to the landlord.
Usually it's done electronically, but yeah.
Yep. Okay, so you definitely want to still, if you're looking to buy, at all this year, you want to definitely be paying your rent if you can. Now, if you can't, that's a totally different story, okay? But if you can, what we're trying to say is there are programs out there if you need them. But if you don't need them, we highly encourage you to continue to pay rent and mortgage, right?
Correct. Absolutely.
Awesome. Thank you. I hope that Ruben and I helped all of you out there. If you have any questions, of course, you can get a hold of me at 561-221-2292. And Ruben, how can people get a hold of you?
My phone number is 954-661-2790.
Awesome. Thank you to our listeners. Everybody have a great day. Bye.